evening, everyone. So thank you for joining us for these exciting live sessions. So this is our first panel session for our CFA Malaysia Career Carnival. First panel sessions, and this is the first time we're doing virtually. And this is also the first live panel that I'm doing, so I'm a bit nervous now. But today I have an up and coming investment banker, I have a seasoned treasurer, and I have from a business, go to China, come back as a risk manager or the head of risk management for Bank of China. So it's very honored for three of them to be with us today. So today our topic is talking about evolving banking landscape. So what evolving banking landscape mean to me? At least for the past 10 years since the financial crisis back in 2008, there's two forces that have shaped the banking landscape today. So the first one itself is that since 2008, based on what I see in the BCBS website, basically the global regulator, there's 430 publications have been done, delivered from the past 12 years, which means there's about 40 documents that as a banker, we need to read to understand how do we do business. So on top of the regulations of the BCBS, there is a lot of changes in terms of accounting. I think a lot of us from the banking industry, we know MFIs might come into picture 2 years ago. It have changed the way that the hedge accounting work, the valuations of all the financial instruments have changed. And then you have the MRS 16, 17, your leasing have changed, your insurance have changed. There's so much changes in terms of your accounting as well. And then further to that itself is that due to the 2008 financial crisis and there's a couple of scandals, more regulators are emphasis on anti-money laundering as well as ethics. So all these regulations have shaped today how the business work. This is the first force that I see have been changing. The second force that to me what have changed in the past 10 years itself is about technology changes. So broadly speaking, fintech is a new term that everyone talking nowadays. So in US market, there's a lot of new changes, equity crowdfunding, P2P lending, and so on. And even from the investment, Robinhood have been taking the headline in terms of the trading and the wealth management side in US. Back in Europe, there's so many new digital banking that's on board, Starling, N26, Monzo, and so on. And all these companies are not just talking about a deposit and loan. They're also coming into wealth management. They just want to be a single app who manage all your financial stuff. And back in China, so I think one of the biggest changes in the past 10 years is how China have transformed themselves from so far behind the Malaysia market to today that is leading the market of changes in terms of banking. Look at how Alipay and Tencent have made the changes in terms of the payment landscape and how they pull all the people using the platform into investment and so on. So looking at the global, bring it to Malaysia. So touch and go, digital, Boost, and even the Grab have made so much changes in terms of payment landscape. Although they are still at the growing stage, but there's so much of us have changing the way that we behave in terms of payment and so on. If they continue this trend, more things will be in their platform. And in terms of the investment end that more of us may be interested on today, we have the three robo-advisory that is changing our market. We have StashAway, one of the everyone should know about StashAway. And then there's the other two competitors of StashAway, have MyTrio as well as Wahid. So if whoever interested in Islamic asset, Wahid is a good platform for you to go through. So all these changes have been evolving our banking landscape. But at today, since March this year, there's another new force that we never expected before. The new normal that we are living today. Yeah. So the way that we work is no longer physically together in the office, and we have been changing the way we interact with each other. So this is something that have been transforming the banking landscape. Traditionally, we only say two, but today I will say there's a third force, which is a new normal that we are embracing today. So I think everyone has listened enough for me. Maybe it's time for me to introduce our speaker and let them introduce themselves to you guys. what they do, who they are, some of their education background, and how to reach today. Maybe I will start with our handsome and up and coming investment banker, Derek. Yeah.
Hi, so my name is Derek Yin. I'm in the Corporate Finance Department of Affin Hwang Investment Bank, Berhad. Did my Bachelor of Commerce from the University of Melbourne, graduated in 2008, and started my CFA studies in 2011. Got my charter in 2015, so that was about 5 years back. And I recently got my ACCA in 2020, so that's earlier this year. I've been in corporate finance since I graduated, so that's my first job. It's been about 9 years, 9 challenging years. But maybe we'll go into details later. Mr. Chu.
Hi, everyone. Derek, you make me feel like I'm so old. Hi, everyone. So I'm Chu Wei. I basically run the Treasury and Markets operations for CMB Group. So looking after the financial markets operations and also the liquidity management of the banking group. So CFA, it's a bit distant for me. So I graduated specializing in economics and financial economics. I started work in 97, the day after Thai baht crisis. So when Neil was saying about the financial crisis, I was thinking 1997. He was thinking 2008. So then I embarked on my CFA. I think I got my charter in year 2000. So I've always been a financial market person. So I worked in Singapore for a couple of years and then came back to join Commerce International Merchant Bankers, the predecessor, the very original OCIMB. And so I've been with the company for about 18 years by now. Yeah. So, over to you.
All right. Hi, my name is Tilang. I'm currently with Bank of China as head of risk. In terms of academic qualification, I graduated with economics degree, I think way back in 1997. Late 1997. So I'm slightly around Chu's age.
Established.
Yeah. So right after I graduated, that's when I started working with the bank in 1998, and that's when the Asian financial crisis hit. Then I moved to China in 2008. That's where the year I completed my CFA. And then I also did my MBA in Hong Kong, and I just moved back to Malaysia about 1.5 years ago.
Oh, wow. That's great.
Spent about 10 years in China, witnessing the very tremendous growth
Of China.
China.
Yeah, I will come back with this point very soon. Yeah, so I think I haven't introduced myself. I've been talking so much. So my name is Neo. So I'm board director for CFA Society Malaysia, and I'm currently working in Maybank. So I started my career in KPMG as a management consultant. Then I joined Maybank in the risk management department. I have done market risk from both traded and non-traded market risk, if you're familiar with. And then I moved on to work on for a year about the commercial credit projects. And now I'm in the digital team looking after digital lending as well as the digital analytics part of stuff, which is the so-called the new trending stuff. Therefore, I'm being asked to moderate these sessions. That's the only reason I'm here. Yeah. Okay. So Derek, what have changed since you started in your industry, moving to today?
Well, the way we gather information has changed quite a bit. It was very manual back then. Back then sounds very far away, but it's just only been about 8-9 years ago.
Okay.
So now we actually leverage on like data platforms, for example, Capital IQ, Bloomberg, of course. So that helps with gathering financial information and makes the groundwork much faster.
Okay.
As opposed to looking at annual reports and then keying in each line one by one in the ones of Excel. So that's different. There's also lead market now, which is actually the third board after main and news market for I would say smaller IPOs, but retail investors can't invest in it. So it's only for sophisticated investors because it's like a higher risk, higher growth sort of exchange. By and large, actually, the work scope that I am currently doing is very similar to what it was back then. It's still very human because it's still a lot of client facing, and liaising with authorities, drafting papers and drafting circulars, prospectus, what have you. So that part of the job is still, I would say, very, very similar.
Okay.
Yeah.
So tell us a bit more on your job. What is the exciting part? What is the challenging part? So that our audience can know about a bit more about your industry.
So what we do covers mainly fundraising and M&As. What corporate finance department in Affin is mainly equities.
Okay.
So we'll do things like initial public offerings, where you list the company for the first time and raise funds. And maybe if it's already listed, we can also help you to raise extra funds through a rights issue or a private placement.
Okay.
So the rights issue is where you offer shares to your same shareholders.
Yep.
Placement is to a new group of shareholders or investors. Or M&As, if you have any companies that you want to buy or sell, we can help with that as well. So the most challenging transaction, I would say, are actually IPOs.
Okay.
Reason being, the level of due diligence now is very, very, we go into very, very detail. Like we thoroughly strip the company down and see what's happening with the company before we actually submit the application to the authorities and have it listed.
Okay.
And it takes, I mean, we pitch, we say 6 to 9 months, but
Okay.
it's actually longer than that.
Okay.
So that is the very challenging part because you have to really know the company inside out because you're going to be like sponsoring the company and putting your name on the line to bring it to the public for them to invest.
Yeah.
So if you do anything wrong or you miss anything or you shouldn't be hiding things from the investors, from the public, from the authorities, that might get you in trouble. So we need to be very transparent. We need to really know what we're talking about and do a lot of due diligence. But at the end of it, when you see the company listed and you ring the gong, not the client rings the gong, then that gives a lot of satisfaction to see, like, in a sense, your baby being born.
Okay. So obviously, is client hire you to help them to list the company, right?
Yeah.
How do you balance fulfilling their needs and protecting the investor in your case?
So it's always normal for the company to want to limit the amount of information that is out there because maybe competitors will see what they're doing, right? And then try to capitalize on that and make their margins go down, for example, or try to penetrate the market. So for us, we do need to try to take a balanced view and ensure that what needs to be told to investors is told. So we need to actually apply our judgment and not just because they're paying the bill at the client. Doesn't mean that we need to bow to all their demands. We need to, because in the end, we are a licensed bank and we are responsible to the public and to the authorities. So there are a lot of times where we need to put our foot down and say that, okay, we need to do it this way. There's no two ways about it. We have to do it this way.
That's very important. That's good to know. Mr. Chu, to you, right? So obviously, Derek, do the IPO yourself. From your team, someone could invest in those stock market, right? Tell us a bit more day-to-day job of your what you are doing.
Okay. We don't really invest in stocks. Okay, but the concept is rather similar. So at the financial markets, or something we call the Treasury and Markets department, firstly start with product. We cover interest rates, so things like government bond, corporate bonds, or the suite of interest rate derivatives that everyone see on the textbooks, like interest rate swap, futures, options, caps, loss, options, and all those. So interest rates, foreign exchange, of course, is a very big section of most financial markets business. Credit, commodity, and also slightly relevant to Derek's business. I also oversee the debt capital market. So it's the raise financing from the debt side and not the equity side. So what Derek just described was the equity financing. So broadly speaking, I think most banks are structured more or less along the same line that you have the product groups that I mentioned. You also have the functional groups. So functional groups, that means what it means is that the nature how we interact with the financial product. Do you do it in a form of proprietary trading, or do you do it in a form of market making, which means you're actually making secondary market liquidity available for customers who want to buy and sell, or are you interacting it in the form of a salesperson? That means you're actually advising customers on that. So largely speaking, you have trading, you have market maker, you have salesperson, and in some of those a bit more complex transactions, you actually have a structurer that helps to balance the structure. So that is the nature of the treasury business. It's the same thing doing again and again every day, but under potentially very different environment every day. So it's a very structured role, but in a very unstructured environment. So that's the nature of the business. Of course, then the traditional treasury part of it is looking at the funding and liquidity management of the bank. Neo, like you say, part of BCBS. Post 2008, there have been a lot of additional capital requirement regulations, Basel II, Basel III, on that. But there has also been a very big reform on liquidity management. Banks, LCR, NSFR, and things along those lines. They could be done in a more structured definitional perspective, and some institutions are also playing around with a bit more statistical model. Can I use artificial intelligence to predict my LCR requirement, or can I predict my depositor withdrawal behavior and profile? Those are the slightly more new toy that we play with, and not everything is acceptable by regulations, but at least it's something that a lot of time we and regulator are experimenting together on those. So that's
okay. So tell us a bit, one of the biggest challenges that you face day to day, and I mean, in a way, what make you cannot sleep at night?
Loophole in governance. So firstly, a lot of people think that losses makes the management can't sleep at night. Yes and no. Yes, of course, as I said, I mean, we hate losses, but we are in the financial market business. Losses is expected. So the question is always, if one of my traders take a loss, I would want to find out that is that what I call a good quality loss or a bad quality loss. Even in losses, they are good or bad quality. Good quality in the sense that if you learn something and next time be smarter, fine. That's the tuition fee that we pay. Okay, and bad quality losses originates from things like being irresponsible, being purposely lazy or not careful, or it may even be outright inconsistent thinking. I think the price will go up, but I sell. That is what I call inconsistent thinking. So I think post regulations, post the two crises of 98 and more so 2008, there's been a lot of emphasis on governance, institutionalization of governance. So no one try to pretend to be a super trader anymore. It just don't exist. Okay. So the question is always, does the organization put through the proper, let's say some we call it the 3 line of defenses, so that there's a proper governance. So that means if we are losses, there are a governance a mechanism to catch all those, whether they are due to unlucky trading view, or it could literally be fraud intended fraud and could be also operational error. And operational risk is one of the very big topics since 2008 as well. So it's always looking for good control mechanism that can plug all these holes. But good, what I mean, it doesn't mean the most number. It has to be the most effective, and yet you don't overdo a lot of activity. A lot of activity don't necessarily lead to productivity.
Governance is very important at this new era because of a lot of new technology changes. People can just do anything at their end. If you do not have good control, it's very much hard to trace all these things, right? Before I continue, right, I believe everyone should, some of you are on our Facebook Live. There's a link on for you to ask any question that you all have onto the platform. You can just click on the link without signing in. You all can ask your questions. And then what you all can do about this itself is that looking at some of the questions, you all can vote which questions that you are really interested to ask the panel after this. Taking the cue from Mr. Chu on good governance, I believe there's increasing of collaboration with risk management team, I believe. So maybe let me ask Thilam, how is risk management day-to-day like, and how do you help Mr. Chu from the front line to ensure all these are properly done?
These tough questions. All right. I think first of all, I think race has changed tremendously over the past many years, right? Previously, I think we only heard about credit risk. The entire risk family has expanded tremendously from operation, fraud, market liquidity, capital raise, everything else. So,
reputational.
And in fact, reputational and AML are the new things that it can cost you a lot more than credit risk. You see banks being fined billions because of breach in the governance, right? So risk being a second line of defense. So I recall one of the old saying is that the best thing about risk is don't do anything, right? Then there's no risk. But that's not the way how business will work. You should enable business. How you enable business in the way that you can control it and allow certain risk-taking measure within our tolerance level. I think that's basically the first line and second line. Under three line of defense, we call it first line, and then second line we watching, like a policeman, right? Anything we issue summon, and then we get them to pay the fines and tell us how to rectify the issue, how to work together, and how do we enhance the control. Like for example, certain due to negligence, it could be a fat thumb, fat finger, or it could be someone that gone crazy, like go the other way, and it still happens. Like you've been very seasoned traders, you can do the wrong side of trading. It happens. I think, and then a lot of things we need to build in the process, build in the procedures, and certain checks in the system. So this is how typically we control it.
So traditionally, risk management or compliance, we always view as a backroom job, and the career prospect is always less attractive as compared to like an investment banker or a treasurer or in the likes or even the corporate banking guys, right? How do we make risk management to be more prominent and getting right talent? Because if let's say the investment banker and treasurer have the top-notch talent, if the risk management guy doesn't have the top-notch talent, how do we actually monitoring them? But in your view, how do we make risk management to be more prominent?
Okay, I think risk management has moved from, I would, if you allow me to put it, from a hindsight, become a foresight, right? So you cannot look at history and then when you need to predict what happened, you need to have certain knowledge, certain model, certain methodology to systematically assess and identify the risk and then control it. So I think that's where risk people become more and more specialized. For example, the risk model team, I thought CFAs were tough. We done all the statistical thing, and then when I look at the model, it's wow. You need a PhD to run their models and then predict what your MFRS 9 would be, your ECL would be, and whether it will change. And this thing can again be rule-based, and then you can plug it into with certain experience and certain judgment. You can make an AI, and then predict the future, predict the change. So this is how it's very become more and more technical and more specialized. And risk, you also see that So someone who is good at operation risk are probably like a very good detective like Sherlock Holmes, right? And someone who specialize in like liquidity, treasury are probably people who are very strong with models, right? And of course, above all, you need a lot of common sense. You need to have a lot of objectivity. This is quite difficult because we also seen risk people sometimes being too hard up with certain rules. Rules are that, right? We need to make it alive. We need to make it proactive and constructive. I think that's where you can add value to the business. It is not necessarily always a very antagonistic kind of relationship. It's very cooperative, work together to manage the risk, bring it down. Then we make profit, we make bonus, we will share.
Can I just add on to
Yeah,
that?
sure, please.
Although business units may be the ones facing the client, right? Actually, behind the scenes, there's so many supporting departments helping to bring the deal through. So you have like committees approving the deals. You have all sorts of support, in terms of your IT, and then you're making sure your infra is in place so that you can work efficiently, productively. Just because someone is in like facing the client, the front runner, the sales department essentially, right? It doesn't take away from the importance of the ones helping to prop these people up so that they can perform what they are supposed to do.
Definitely. Just I think, I mean, as all of us know, not every bank or not every organizations have recognized the risk management function enough. I mean, someone from the risk management perspective, I think some of the organizations are really making risk management to be more and more prominent, but I think it's a collective effort across the industry. So I think very happy to see a panel of these like very supportive of risk management.
Well, definitely, I think now it's always risks are no longer policemen. It's actually a business partner. And so, like I think, like Derek say, sometimes it's not glamour to be the one facing the customer. Sometimes you need to be the one wearing the bomb-proof jacket to stand in front of the customer and take the hit, right? That's why I think no one enjoy the glamour of standing in front of the customer. But I think risk has evolved so much, and a couple of things. One is definitely it's a business partner, and then second thing is the movement between it tend to be one-way traffic. Senior business people move over to risk management. We actually see more and more of those.
Which actually help the risk management team to understand
and appreciate. It kind of like close the gap between the business view and the risk view.
Correct. Traditionally, it's just very theoretical and whatnot. But I think
some of the models, all those things are required. I don't say they are redundant; they are required. But a lot of time, banking is about common sense.
True.
I always think that, especially in normal commercial banking, which is largely where we come from, right? If you think about it, the type of customer that we are facing, the customer doesn't require a PhD in mathematics or nuclear physics in order to do a transaction with the bank.
Correct.
We never expected that, right?
Yes.
So no matter how we banker transform data, eventually you have to fall back to the same common sense, and because the risk came from the transaction that we did with the customer, whether you call it loan, you call it deposits, or even a exotic derivative contract. It's only as complex as the deal that you deal with the customer, and that itself, post-crisis, can't be too complicated. I mean, gone are the days of you sell CDO squared to a mom and dad on the streets, right? So that itself can't be too complicated. So common sense has to prevail. And a lot of times, sometimes, unfortunately, in a lot of circumstances, we realize that common sense is not that common.
True. I mean, not everyone have the same common sense that is common enough to derive everything.
So for people who really have the heart and the initiative, it is actually not that difficult. It can't be that difficult.
Yeah.
If it's that difficult, there's something wrong. We sold the wrong thing to the customer already.
Yeah, true. But having said that, right, yeah, common sense is very important. But if you look into the places like LinkedIn or even all the job poster and whatnot, right, there's increasingly people hiring AI or analytics specialists. What have this thing changed to your day-to-day? Maybe can I hear from every one of you in this case? Yeah. How is it improve the productivity or improve the accuracy of what you're doing? Derek, what is your thought?
For me, so for example, like coders. So we have coders in the bank, but for now they are focused on, for example, onboarding clients or doing up portals for your services. Maybe automating reporting to the authorities, to the regulators. So in terms of dealing with voluminous things, where business is involved, I think it's still not really in play yet.
Okay.
It's still very human. It helps to assist in our work by using data platforms, for example. But we don't really need to learn coding or employ these kind of sophisticated techniques as part of the job. So common sense revealed, right? And then leveraging on financial knowledge, for example, if you learn through CFA things like financial modeling or your DCFs, your Black-Scholes options, then that will also come to play in your work, in my line of work. And having that background will assist, as opposed to someone else with a different set of expertise like coders. So it's totally different career progression, I would say. It's a different line of work. It depends on your interest.
But I think this is true from the treasury team. I suppose when you do some sort of sophisticated narrative, you always have a quant team that they are highly skilled in this case. And can this skill be transferred to other businesses or so on? Yeah, because they are so highly qualified in the sense, maybe some PhD in some financial economics, financial engineering, and so on. Yeah.
Well, whether it can be transplanted into other job skill, it really depends on the person. Treasury is a world where, of course, the number sense must be there. I mean, the person must have a good grasp or good appreciation of the number.
Correct.
But again, despite being number, common sense matter a lot as well. So case in point, I mean, if we go slightly more a bit academic, right? Some people will just say, okay, fine, we all study Black-Scholes in finance, we study Black-Scholes. Probably somewhere in the CFA syllabus. A Black-Scholes call option is a very bombastic way of saying risk neutral measure on the probability of upside surpassing the strike price of an option. Very technical term of looking at it. But a lot of common sense people can kind of put a bit of thumb in the air and have a feel and look at it and say, based on the non-risk neutral measure is my real life measure, I have a good gauge on what is the probability of winning. I absolutely disclaim I don't promote gambling, but a lot of gamblers do have good feel about what is the odds of the outcome of the game.
Interesting.
So while we could technically model a gambling game, just like the casino, will have the best rocket scientists to model for them. But the man on the street does have a reasonable feel. So that's what I mean about as much as we have a rocket science model, the important one is whether you can translate that into a good feel, because we sell call warrants. Listed call warrants is in abundance on Bursa. Does it mean that everyone knows Black-Scholes? The answer is no. a lot of them have a good feel about how to trade warrants, rightly or wrongly. Okay? There is a product that's flourishing.
Yeah.
You can have the man on the street that based on their gut feel. You can have a guy sits in the bank that uses Black-Scholes. You can have a rocket scientist in the risk manager that say Black-Scholes is not good enough. I need 3 more generation, more advanced model. But they are all staring at the same thing.
Okay. Yeah, this is a very, very different view, but obviously this is a correct view as well, personally. But Kilam, back in your China day, I suppose you're definitely aware of Sesame score of Ali, right? So in that sense, Ali have used a lot of data they have collected, and definitely they need a sophisticated analytic skills to make the Sesame score available, right? Is something can work back in Malaysia market, or is it only can be done in China?
Okay, I think they go back again to the credit risk, right? Credit risk used to be based on information submitted by customer. You make an informed judgment based on historical pattern, right? Someone who earn maybe 5,000 versus someone who earn 50,000, the default rate should be different. Then you work out that one. Therefore, you conclude that, let's say group A is safer than group B, you'd rather go for group B. How Sesame, the current financial has changed with all this information is they move to behavioral. Okay, i.e. they gather a lot more data that are non-financial. So for example, Sesame, when I stay there, I have my score. Then I realize it's my parent, my rent on time. I park my bicycle at the right place. I pay my ticket, I pay my utility bills, my score will go up. And if I do transaction with someone safe like you guys, my score will go up. If I friend you on my Facebook, right, you guys have no criminal record, my score will go up. Right, but however, on the other hand, the reverse is true. So it kind of like more predictive. We use a lot more data points to predict the behaviors. So this is how Sesame usually works, right? So you can actually game it as well.
Okay.
Yeah, you can game it as well, right? Yeah,
Okay.
you can unfriend, let's say, maybe you and my friend just go out. That could be the case, right? If I knew it. Right?
Yeah.
But of course, you get more sophisticated. For example, there's the first order, second order, third order. Let's say if I friend with Derek, he's a good guy. But he has a group of friends who are crooks, who are terrorists. Then we go second order, third order. Hey, a lot of codes are with the terrorists. Then I will stop fighting him.
Right.
And my score will not because I'm a friend of him. Right. So this is how the behavioral thing we fit into, and we tell you how likely or how creditworthy this person is, not necessarily from a housing loan perspective. Same applies to corporate.
Okay.
So they can gather all this data, they come up a more predictive model. So it's about data point.
It's very nice to hearing this directly from someone come back from China that we potentially can game it. So I think if we done it in Malaysia, maybe we have a lot more people very good in gaming stuff in Malaysia.
That actually even happened in all these high velocity trading. It's a multiple version. Right? First, someone design a code that beats the system. Then next is someone else design a code that beats the system that beats the system.
So it's a continuous.
So it just go on and on, right? So to the extent that if I know how the algo of company A works, I can actually design a code to fool company A. Practically, I'm attacking. I'm actually attacking the company to take advantage of it. So it just go on and on, like exactly what Tilam says. So.
This is how that is evolving, right? It's virus and antivirus.
Exactly.
I think before I go to the questions that asked by the audience, right? This is a particular question. Maybe I want to ask Tilam because of the experience go to China, right? So maybe tell us a bit. Why do you move from business to risk? Go to China, come back to Malaysia, so that if anyone aspiring to go China, we can learn something from you.
Well, I think I like working in the bank. I think one of the quality has to be versatile. You have to willing to put out your hands or ask for something. So, like for example, when the opportunity opens up, someone is looking for a risk manager. My ex-boss in China, he's looking for a risk person, but he wants this person with a strong business background. Exactly what Chu is saying. Right? He doesn't want a person who is good at risk. He wants someone who is good at business and then willing to come to risk. So that's how I move forward. That is a right fit. Then also for that time, as you mentioned, China has a huge demand for, like say, a risk manager. Right. If you look at China, they developed over the past like for 50 years, let's say, right? There was never a crisis that hit China. It's always double, triple growth, not about percentage. It's like quadruple, 10 times, 20 times kind of growth. The kind of balance sheet growth is exponential, right? And here we probably are talking about maybe 5-10% growth is considered growth. Right? So it's very fast paced. And the market, the consumer change a lot as well. So it's a very exciting market to be in. Those days there was this opening up, so they attract a lot of Malaysians, Singapore, everywhere, so-called people with a bit more experience and bring in that experience. Now you can see the trends reverse. They're actually exporting
talent.
Yeah. So the trend has reversed. When I go to China, you can actually find that, for example, when I walk in Chongqing, they accept only coins for $1 below. And whereas you go to Shanghai, the currency is not interchangeable, it's one currency. But now everyone uses Alipay, everyone uses the WeChat Pay. It totally transformed. And the bank's role in that sense have changed. But for example, you might be okay when you do an ATM card, but when it comes to someone transact on your ATM card, you lost control of that transaction. So then you had to again step out on your control. For me, moving back to Malaysia was the right reason for more for personal, for family. Being a Malaysian, I miss Malaysian food a lot. So I put on a lot of weight after I moved back. So and Malaysia has also a lot to catch up as well. I think in terms of talents, being multilingual used to be one of our strengths, but now I think it's that beyond that. In terms of technical skills, willingness to try, willingness to ask questions. Like for example, when I was in the other side, a typical forum, there'll be a lot of people who put out their hands and ask questions. People are very eager to learn, very willing to improve.
Okay.
And if you speak for a panel, they will always ask you a contact point, and they will write you email, ask you certain things. They will really make sure they get benefit out of attending, for example. It's their willingness and eagerness to learn and progress. I think that's one thing that we also like to see more of.
So the attitude of the Chinese people are very much different.
I would say more hungry and more eager. And more willing to put out. Don't be shy, right? Jangan malu, right?
Is it still good time to go China now?
Well, I think you can't go because of COVID now. But yes, I think for most people who are at their younger generation, young people willing to try new things, yes, I would say that not just China, it can be anywhere in the world. Because I think the competition also has changed. It's no longer like you are local talents. You have to see as a regional, international talents. Because the competition is from everywhere.
Okay. Nice. So we have a couple of questions from the audience. So the first questions, right? Any one of you can pick up these questions. So the first question comes like this. So is commercial banking or investment banking is a place to start the career in banking? Where should we start? Either commercial or investment banking. Where is a better place to start? Maybe I can hear from Mr. Chu. You have like 20 years in the commercial banking, and Treasury is like kind of partially investment.
Can I answer none?
None. Okay, sure. Why?
Start from operations.
Okay.
Well, generally, it's kind of interesting. I mean, all this talk actually made me feel very old, right? So, my general sense is, anyway, in banking, most banks nowadays have some form of a trainee program. Okay, so especially for fresh graduates and all those. And I'm always a proponent that it's very rare period in your life that people pay you money to train you. Take advantage of that period and learn the most. What I mean learn the most is actually learn the area that you do not want to settle in. If you want to be the investment banker, during your training period, please don't learn investment banking. You have your full life facing investment banking after your training period. But you never get a chance to learn anything else after that.
True.
And why is this important? It actually differentiates you. You will own that little bit of skill set that your colleague who start day one in that department and rise up will never have a chance to learn that. Be it investment banking, commercial banking, treasuries, or whatever. This one, at least I speak from experience. I had the privilege of working around for nearly 3 years plus in various departments. Some of it is, you may call it a bit so manual that like vouching, the whole cash vouchers. I've done vouching before. But at some later part of your career life, you will appreciate that. And there's really no rush to start your work. Nowadays, with retirement age being postponed later and later, like on average, we work like 40, 45 years. 40 years of our life. Start that 2-3 years later, no big deal. But that few years really make you a very different person when you are in the mid-30s or late 30s. Between to the bosses, between promoting you or someone else, someone who had a wider perspective of things, the quality of decision, the quality of proposal that come out will tend to be very different.
Derek, you got any thought on this? You are the closest to the generation that maybe hearing this.
Well, I think now the market is a bit challenging. So I would say maybe don't be so picky.
Okay.
Get in first.
Get it first. Take what you can get. If times are a bit slow, take the opportunity to learn more, try to value add. And there's always, it's not just because that's your first job, it won't be your job forever. You can switch roles after a few years of experience.
That's a great advice. Get in your first job first. Always start, then only think about what exactly you can do. I think most of the organizations now are encouraging you to explore across the industry, the bank, to see what is the most suitable for you. Because hiring is not cheap for a bank in a way, just for everyone understanding.
And be good at whatever you're doing, whether you like or you don't like the job. Put in a good attitude. To do that.
Okay, go to next section. Maybe Thilam can help to answer this, right? So banks' earnings are structurally lower in the coming future, and everyone know about it. So will a banking career still grow in the next 10-20 years?
Wow, it's tough. Okay, I think put it this way. I think now currently banks earning are definitely under pressure for a lot of reasons. Asset quality, the business opportunity are far lesser. Risk taking are definitely less. And money flow into places where the bank probably wouldn't touch, like say stock market. So we need to find a way is a blue ocean strategy. Right? For example, I think banking again, because you talk about evolving, changing landscape, right? Banking is no longer what it is, right? It's about service providing, and where do you compete with so many, online. For example, like you can now open a online or brokerage account or buy unit trust online. Totally, you don't need anyone involvement. You can buy yourself, do your self-assessment. So, what is a bank's proposition, right? So the human touch is probably still where it is important. right? You don't want to talk to a machine. Press 1 if you want this, press 2 you want unit trust. You probably want to speak to someone. That is where the value add can come.
Yeah,
right.
Correct.
And sometimes it's easy for you to go online and say, this is my profile, this is what I need. But someone will say, hey, you probably need something else. You don't buy unit trust, buy insurance, right? So that kind of advice, personal touch is very different. And the other one is like, so the banking also go for, there's different strategy from different market segment. Mass market, you have one segment. Maybe from a very high-end market, you have a different segment. So I think market segmentation and your approach to each of the market will be different. And the channel you deliver them will be different.
Yeah, definitely.
Yeah, I think that will be what I see. And therefore, if you ask about the career, I would think that Mr. Chu is quite right. Like, do whatever you want. Give it a try. You
Do it well.
Right? Yeah, and do it well. Because at the end of the day, it's the attitude, it's the versatility that makes a difference. And banking will not. For example, when I started, I think in 1998, one thing I hate the most is go to the branch and check the vouchers. Did they use a red voucher for this, use a green voucher for that? It's a most useless thing to do, right? But at least that proved that I'm not colorblind in the first. But on the other hand, that teach me a lot of things about the fundamental of banking. The very, very fundamental. So now even at this stage, you ask a different forum, you probably ask, did you get your basic right? If you get a basic wrong, everything is wrong. The whole process can collapse. So I think that fundamental is still very important. So I think career, yes, there will be, but the chances in getting more specialized, and you will need to forever work on catching up and enhancing and gain more knowledge as things change. For example, AML. Probably 10, 20 years ago, probably not many people talk about AML. Now I have a lot of friends who call me and say, how do I open an account, right? Like, it's no longer about how to fill the form, it's about how do I fulfill certain requirements. So that you still be able to offer certain advice. So I think that touch is still there.
Yeah. So in summary, can I say the job, the banking is still required, just that the form of the banking might change, the skill sets that might change. So the important point for all of us to take away in this case is we need to continue learning the latest skills so that we can up to the par of what we need to do in a way. Yeah. Do you have any additional point to what you
And also, you need to know what is the strength of whatever industry that you work for. I mean, case in point, sometimes I think the first thing is get a job first. It all depends. I mean, different people have different circumstances. Unless you come from a very well-off family that everything is planned for you, and other than that, a lot of time we do find that people overly analyze. First, they think, I want a job in this industry. Next, I want this company. After this company, I want this location. I want this department. I want. So everything is I want. Have you asked whether the company wants you? That is very idealistic. Okay, it's not to dampen the enthusiasm of a young person, right? But you also need to be practical, especially I think these 1-2 years, whoever who just graduate, go out in the job market, we understand it is not going to be a easy job market. Get a job first and then understand what is good at. I think I suppose to a lot of people who are one way or another related to CFA, so financial industry is there. So you talk about bank, you talk about investment bank, you talk about brokerage firms, and maybe asset management. These are the classic one. Of course, we are all attracted to do at the Google and the Facebook of Malaysia and the tech side of thing. But whichever way you start your career, know what are each of these industry good at. Banks are good at. What banks are good at is also what banks are bad at. Banks are good at being institutionalized. So there's a lot of procedure. everything. Of course, sometimes because of that, banks are therefore being accused of too slow, like a dinosaur.
Yes.
Okay, but you also seen a lot of supposedly fintech company that gone into a high-speed disaster. The company go out rah, and then no policy, nothing, and then there's no structured decision-making processes, and some of it is like some of the biggest names that we heard about. I mean, you can read the Financial Times about what is happening inside WeWorks, and these are hundreds of billions of companies supposedly, right? And so the important thing is to know what you are harvesting from each of these industry. You could be harvesting some of the innovation, the fear nothing, try everything kind of attitude of a tech company, versus a bank that let you be more having a more stable foundation and more structured. And that to me that is important. People will jump in between the two industries.
For nowadays, definitely.
But you need to know what value you are bringing to the other side. If I come from a bank, I join a tech company, what is the tech company looking in me that they themselves don't have? Or if I hire someone from a tech company, what am I looking at the person that the traditional banker doesn't have? As long as the candidate knows clearly the strength of each, they will be successful.
True. This one I can definitely looking into, agree to, because I'm in that space that I need to balance between speed and also the quality of the product that we are delivering. So a lot of people always say whatever I'm delivering is so slow. Why? People have delivered like 5-6 version, but people doesn't know the 5-6 version have so many issue in the 5-6 version. But for us, because of the control that we have making sure the quality that we deliver out to the market is actually, and may not be the greatest, but at least there's a certain standard that we have fulfilled. It's all because of, like Mr. Chu saying, the institutionalizing all the processes that actually help us in delivering certain quality of product, although slightly slower speed. But I think the banks are aware of all this. All of us are trying to meet the speed at the same time protecting quality, but not all the fintech guys. That some of them are really just playing on the speed, and all of them are looking for funding as quickly as they can in the sense. So the same, I think whatever you answer, I've answered quite a few questions, like what are the most important skills and stuff like that. So in short, for those of some of the questions are asking about skill and whatnot, right? There's no specific skill that one needs. What we need to continue doing is continue learning, be hungry, and most importantly, get into the job first. You don't get into the job, you are nothing in a way, right? So this is a very interesting question. Very short, but it can be very, very long answer, right? How do you view digital banking? Will this be what is the impact to the traditional banking? Maybe as I can, Derek. From digital banking, a lot of people understand, I think as a consumer, are looking very much on the consumer side. But from an investment banking perspective, will there be a digital investment banking?
Let me take it from the equity fundraising point of view.
Okay.
So there are now platforms that allow private companies to raise funds. So that's like similar to an IPO, right?
Equity crowdfunding.
Equity crowdfunding, P2P. So these are the private platforms that people can invest through.
But they're regulated under Security Commission.
They are regulated, But retail people will have a smaller amount that they can invest with because of the high risk involved, and there's much less regulation on these platforms as opposed to your brick and mortar traditional IPOs. So currently, we don't see that as being maybe a competition or a big differentiator, because they are playing at a different space.
Okay.
Right? They're raising maybe, 1, 2 million, 3 million, for example, for their initial growth phase. And then maybe you have your angel investors investing through the platform to that. Whereas if you are already bigger, you're earning 100 million profit a year, for example, you wouldn't go through these platforms anymore. You will probably do a normal traditional IPO where you can market it to
Okay.
a larger group of investors,
Okay.
to funds that can only invest in these IPOs as opposed to the higher risk, lower disclosure regime. Okay, I mean, of course, that is booming as well because that's an option for people who may not have reached the size for a feasible IPO because of all the expenses involved. Because it's cheaper.
Yeah.
So I think both will just not grow, but continue to be important concurrently. It's not like one is replacing the other.
Okay,
Yeah.
okay. Mr. Chu, from your side, what's your view? Be it your business or the general business of CIMB, as a banking group perspective?
Well, anyway, I don't comment on behalf of
Yeah,
CIMB.
of course, sorry.
Just personal
from a
view.
banking, from a banking perspective.
I think the question is slightly obsolete already.
Okay.
This thing called digital bank or traditional bank. I think they're supposedly the same thing.
Okay.
Just that the approach is slightly different. There is no traditional bank that can survive without technology. There's also no full, supposedly digital bank that can survive without a capital of a bank. So to me, that separation perhaps was overly hyped out a few years ago. And now I can actually see a convergence. Of course, there are banks who want to invest a bit more in technology than, let's say, brick and mortar. Of course, there's still some banks who pride themselves that we are the relationship neighborhood bank that is the brick and mortar bank. So to me, it's about offering choices. But I can see a clear convergence between the two. And it's not so much a choose one versus the other, or one will survive at the expense of the other. I think it's no such thing.
Yeah, true.
Perhaps is over the long run, it's easier for a supposedly, or the term called traditional bank to go digital than a digital bank to get the size of a traditional bank.
Yeah. In a way, this one I can add on a little bit since in the industry itself, right? So, Bank Negara Malaysia have going to finalize their platform. I mean, finalize their framework, their digital banking. They're going to issue up to 5 licenses. So in this case, they are opening up for mainly on the non-traditional banking industry to come in. But why they need to open this space is because traditionally there's a lot of customers have not been well served by the traditional bank because serving those guys are actually too expensive, especially the underserved segment or the unserved segment. To acquire them, our traditional banking cannot be done because it's just too expensive or not cost effective in doing those things. So in a way, Bank Negara are trying to do this to create competition for traditional bank to look into this space. So looking into the question, so traditional bank may somehow rather one day may not be relevant if they are not changing themselves. But even with the new license, what Bank Negara actually want to do is that, hey, the new digital guy can do something on this group of segments, while you, traditional bank, you can't do it. If the traditional bank is good enough to think about serving all those segments, go in and then we can change the landscape. And the traditional banking still will be relevant in the market in that sense. Yeah, I think let's have a last question from the audience and then we will wrap it up. Yeah, sure. I think this one will go to Thilam. How do you see the current regulatory framework changes after the pandemic?
Okay, I think if you look at the local front, there's a lot of government support. Even in Bank Negara side, these are moratorium and stuff like that. I think basically, if you allow the bank to do it their way, a lot of assets will be impacted, right? And they will reach a point of non-return. They will start collecting and start killing the company in a way. But with all this support, they actually kind of give banks more avenue and option not to kill it now.
Mm.
Give them more time. Hopefully, they will recover from the pandemic. I think this is what is important. The other one is that you can see across the world. I mean, many central banks has done that, like pumping liquidities and everything else, right? I think which seems to be a necessary evil at this point in time. Of course, the money doesn't always go the way they're supposed to go, but at least some of it will flow through. So keep the economy alive and ongoing, right?
Okay.
I think the view is that this COVID is likely to be short term. When it's over, they will slowly recover. And if you stop all the pipe, the water doesn't come in, everyone will die.
Yeah.
Right. I think that's how it is. Right.
Okay.
So I think there are a lot more leeways and room for banks in terms of, for example, concession of the capital adequacy, liquidity. They give you more, give the bank a bit more avenue so that they can continue to provide the support.
Yeah.
And in fact, that goes to the question just now, right? Bank is still a very well managed entity in this current environment, right? You look at a lot of business already started cutting staff, stop operation and stuff like that. Banks still ongoing, and in fact, we are getting more and more busy. Right? In terms of like, they are so well regulated, so well managed that they are able to tide through a difficult period, right? And therefore helping others to tide through as well.
Correct.
So I think that is another benefit where I see you working in a bank now. It gives you a different perspective and give you that discipline and structure and capitals to support.
So with that, it's very nice to end. So basically, in a way, there's still a lot of career opportunity within the banking industry. But more importantly, is how you actually capture it and do it from the onset of your career, right? So, but let's say to help all our audiences today, can I just get help from all of you to give one last piece of advice to the audiences? Anyone can go ahead first.
From the most junior here, I would say to excel in your job, try to make your boss's life easier by maybe learning as much as you can, doing as much as you can, taking on more than you can chew, I guess, and learn as much as you can and be a responsible employee. Take ownership on your projects.
Do we need to advertise for CFA? Okay, joke aside on that. Agree with everything that Derek says. Anyway, since we are here today on a CFA event, I think differentiating yourself is important. I mean, it is a crowded space out there. So the question is, I used to say that when everyone has a degree, what is so special? Then people go for their masters, people go for their PhDs. Of course, I think some, not small number of people go for CFAs and things like that. It's not just about competing for accumulate the number of pieces of paper qualification. Sometimes, a lot of times, it's actually, at least to the bosses, is a sign of commitment. It's a sign of commitment that I personally like CFA because it is something that you supposedly can't do it in school. It's things that you have to do at your work life. And it's not easy to start the work life and have the discipline and commitment to continue to study. The knowledge is important, but to a lot of people who graduate from finance and whatever, the knowledge is actually not that much additional compared to what you have studied at a degree. But the signaling effect of your dedication to work or your dedication to sacrifice, to me, is a very strong messaging point. And always when you're neck to neck competing with another candidate, these are the little things that kind of differentiate a person.
Okay, so it comes to recruitment, right? I mean, like, especially, let's draw my example. Let's say in China, it's very crowded, very competitive market. Almost everyone has a master, and usually from top-notch universities. So CFA and qualification at CFA becomes a really cream on top, right? So it differentiates you not so much of qualification, but in terms of dedication, commitment, and also the attitude, the willingness to continuously develop yourself.
Yeah.
I think it's a career advice. I think what is really important, like it's as straight as banking, I think integrity is very, very important. Don't do anything discredit yourself, right? And I think because at some point it's all about that reputation that will hold you up above the rest, right? And then hard skill you can learn as much as you can, as you want, right? And sometimes just be patient, like in economy like this, you probably won't get what you want. You probably will be end up an account clerk or whatever, but so be it, right? Do it well and be the best account clerk in the bank. Then you will slowly get your chance. You will get noticed. You will get move on. And in fact, I've seen over the our career, you see people who might have a slow start but build a strong stamina. When it comes to the point that they are free trial run, they will just way ahead of others, right? So I think that is what I'm trying to share.
Oh, thank you so much for the valuable advice. So I think with that, I think it's towards the end of our today's sharing of evolving banking landscape. So just sum it up with 2 words: stay hungry, start now. Don't wait. Okay. Okay. Thank you so much, everyone. So tomorrow at the same time, 6 o'clock. Please feel free to join our next exciting sessions on asset management. We have 3 very, very experienced fund manager to be with us tomorrow, 6 o'clock as well. And also, please visit our Career Carnival portal. I think there will be is on our Facebook post and LinkedIn. Please feel free to visit those. It will be helping in your career. There will be a couple of employer will be featured in the next couple of days. Look out to them and look for the opportunity to start now. Okay. Thank you so much, everyone.
Thank you.
Okay. Hope you enjoyed today's session.
All the best, everyone.
Okay.
All the best.
Thank you.